Finance startups are attracting billions from private capital. Despite that, we're seeing very few liquidity events this year. Take a look at the most valuable names. Stripe is by far the biggest. There are now more than 58 so-called FinTech unicorns out there. We saw Bill.com last week, but otherwise not a lot of mega deals. Investors worry about sticker shock, among other things. These private price tags have not made banks big buyers here. The most likely path is an IPO, according to investors. But when these finance startups do end up tapping public markets, investors may not see them as a tech company. The most obvious comparison is a bank, which don't trade at nearly the same multiples. Wilf?
Hey, Kate, I love all of these stories. And Chime, we discussed at length recently. Hugh Sun had some data on that. It was on a sort of 20 times multiple, 20 times sales multiple. I guess the difference being is that created a huge amount of value, these startups, but I'm not sure they've taken that much revenue from the big banks, which is slightly different from, say, an Uber threatening taxis or an Amazon threatening retailers.
Right. When you look at the actual user numbers, they're tiny compared to JP Morgan, for example. But the public comparison of when these companies actually go to IPO, investors have said they're not a tech company. You know, they do the same things as a bank. In many ways, they're not a bank. They partner with U.S. Bank or some of these chartered banks in Utah. So I think public market investors will really want to see the value there. We saw it with WeWork. They saw it, they valued it as a real estate company versus a tech company. So it works in private markets. Investors are wondering if that can carry over to an IPO, which we haven't seen a lot of. So it's sort of uncharted territory.
So, Kate, stay with us. We want to get your take on this story as well. The Wall Street Journal this weekend highlighting tensions between FinTech and big banks after some PNC clients experienced trouble connecting their bank accounts to Venmo, or they had been connected and then suddenly they weren't connected anymore. Both companies gave customers different instructions about how to solve the problem. Venmo tells users to tweet their concerns to PNC. PNC told customers to switch to Zelle instead. Zelle is a Venmo competitor that PNC and other big banks operate jointly. At issue here are these wider concerns among the big banks, reportedly saying, look, we have security concerns that limit access to customer information on FinTech platforms. But, Kate, the other part of this story is that they have a really proprietary view of their customers' information that belongs to the big banks' platforms.
I think the huge takeaway here is who owns the consumer's bank data. It should be the consumer, and that's what the banks would say. But is it really your data if you can't export it easily or move it to a consumer app like Venmo? You have these sort of third parties like Plaid, which has become a middleman in this instance. But I spoke to a few experts and lawmakers who basically said this open banking issue is a real problem. And there something like this with PNC arguing with Venmo over, what is best for the customer really underlines that open banking issue, which, Wilf, we've seen in the UK with some legislation there. So we'll see what happens in the U.S. But I think that's sort of the big takeaway is who owns that consumer data.